Good evening, members. Welcome one and all to this study circle meeting on Supreme Court ruling on ITC under Erstwhile laws and restrictions of ITC in GST laws. To dwell upon this subject, we have CA Annapurna D Kabra, madam. Can I request CA Soumya, madam, to escort Annapurna, madam, to dais and then welcome her with a floral bouquet? Thank you, ma'am. I have a privilege in introducing CA Annapurna D Kabra, ma'am. Annapurna Kabra is a fellow member of Institute of Chartered Accountants of India. She has completed her articleship under Rajkumar Hanchinal and Co. Gulbarga. She has completed her DISA and DIRM course as conducted by ICI. She has contributed her articles on VAT and GST and is a regular contributor of articles to various professional journals, including Bangalore branch of ICI Journal, Karnataka State Chartered Accountants Association Journal, and SIRC journals and IDTC committee of ICAI. She has co-authored the book on Guide to VAT Audit and Value Added Tax in Karnataka. She has co-authored the book on VAT Audit for Institute of Chartered Accountants of India. She has also co-authored background material of indirect tax of ICAI. She has authored the technical guide to KVAT for ICAI. She has co-authored the book on discussion paper on transitional issues towards GST. She has assisted in drafting for background material on GST for ICAI and technical guide to GST audit of ICAI. She has co-authored book on refund under GST to KSEAA. She has contributed e-lectures on various topics in VAT and GST to IDT committee of ICAI. She is a faculty to GST certification course as conducted by ICAI and is a member of Bangalore study group of ICAI. She is a committee member for development of study module for Karnataka State GST officers, and she is a regular faculty to Fiscal Policy Institute also. Apart from that, she has addressed more than 600 seminars across India. With this brief introduction, I present before you CA Annapurna D Kabra, ma'am. Over to you, ma'am.
Good morning, all the members here. Because first time I'm meeting you, so I'm saying good morning. Anyway, good evening to all the members. First of all, I thank Bangalore branch of ICI for giving me an opportunity to share a few insight on the relevant topic, that is restriction of input tax credit under the Erstwhile law. And also we'll be discussing a recent Supreme Court ruling on ITC under the Erstwhile law, that is a state VAT law. So this is a topic which has been assigned, and we'll be discussing on certain practical aspects from the GST perspective. And we'll try to, if you have any issues on those case studies or any other issues, you can interrupt me and we can discuss on that respective issues. So with this, I start the session on the input tax credit. Before talking on this topic, I think I just want to say that this is input tax credit has always been a litigated topic. And if you see in the Erstwhile law, most of the litigations are there on the input tax credit. As compared to this output tax, I think we are able to see that a lot of litigations are continued, like Erstwhile law, it is continued even under the GST law also. Why this litigation? That is a different aspect. But what is the mechanism which is leading to litigation under the GST law? Let us try to understand the background of that. As you all know, with the introduction of GST, there was a mechanism to introduce the returns, which will automate your credit. The technology will take care of all your compliances, and accordingly the eligibility or of the credit will be decided by the artificial intelligence. But unfortunately, the technology did not work out. So it was left with the semi-returns, that is nothing but the GSTR return. GSTR 1 was effective, that was implemented, but GSTR 2 and GSTR 3 failed in their implementation. So with this, as the GST was supposed to get implemented on 1/7/2017, and the system was not working out because of GSTR 2 and GSTR 3 failure, they introduced a temporary payment challenge, that is nothing but GSTR 3B. That was just a temporary, I can say it was just a temporary payment challenge where you disclose your output tax, input tax, and finally you arrive your payment and pay to the government. This was just a temporary collection of taxes. Then with the span of time, the GSTR 1 was partly it was implemented and partly GSTR 3B was implemented. The assessee, the taxpayer were complying with these filings, but there was a lot of new amendments which were happening in the returns. And in between, I remember in 2019 or 2020, they were supposed to bring out some new returns. I think some of you remember, I think. We had a new return, GSTR 1, 1A, GSTR 2, 2A, and 3. Unfortunately, even that system did not work out. Though they came out with a lot of manuals, lot of instruction, format, everything was ready. But unfortunately, even that did not work out. Then government decided now how to implement this credit aspect. So what they did is they turned up this 3B itself as 2 and 3. So they have called this 3B itself as a return. That's why they made an amendment in the rule 60. If you can see that they have made an amendment because there was this went up to High Court saying that 3B is not a return. When it is not a return, there is no question of reversing this input tax credit because it's not at all a return. So where is the question? So you are fulfilling the condition of 16. So accordingly, all that app and company it went to Delhi High Court, all those things happened. Then accordingly, they amended Rule 60 and made 3B as a return. The problem is because of last 5 to 6 years, so many versions has happened for 3B. The litigation arose because of non-implementation of GSTR 2 and 3, because of multiple amendments in the returns, and because of multiple amendments in the sections and the rules pertaining to input tax credit. Now, the most important is I am going to discuss on certain case studies which pertains to the procedural non-compliances. There are certain case studies which are still having a different school of thoughts, and there are few case studies which is talking on the technical aspects of input tax credit, right? So I'm just trying to touch upon certain few case studies which I have experienced. And I take a disclaimer that these are my views or these are the views which is giving a school of thought on that. There might be a different view because there are certain issues which are pending before the higher authority and we have to wait how the higher authority are going to give the law of this land. So before going into this, I just want to say that we'll be discussing on each case studies. I have just noted down some 20-25 case studies. A lot of sources are there from background material, from other experiences, case studies, whatever I was able to think on that, I have tried to put in the form of case studies. If there is anything you have experienced, you can add up or we can have a different discussion on this input tax credit, right? So with this, before going into this chapter of input tax credit, basically, as you all know, because last 5-6 years we are dealing with this input tax credit. So chapter 5 of the CGST Act deals with the input tax credit, and section 16 to section 21 deals with the aspect of input tax credit. So section deals with eligibility and conditions for taking input tax credit. 17 deals with the apportionment of credit and block credit. 18 deals with availability of credit in special circumstances. 19 is talking on inputs and capital goods sent for job work, and 20 is talking on distribution of credit by ISD, and 21 is talking of manner of recovery of credit distributed in excess by ISD. So basically, I think we'll just deal in detail when you are going to discuss on that. So these are the sections which has to be read before analyzing the aspect. And the relevant rules are there from Rule 36 to Rule 44. So whenever we are going to read on the topic of input tax credit, we have to read these sections and the connecting rules, which gives the basic mechanism of input tax credit, and computation mechanism of eligibility of input tax credit is determined from rule 36 to rule 44. Before going into this, the most important is we have to read into the definition of input services, capital goods, what is input tax. I think more or less you would have gone through this, but just for the reference, section 2 subsection 59 has defined input means any goods other than capital goods used or intended to be used by a recipient in the course or furtherance of business. So as compared to the erstwhile law, the definition is very wide enough under the GST law. And the input excludes the capital goods because the capital goods are the one which are capitalized in the books of accounts. So there's a difference between input and the capital goods. So that's why they have excluded the capital goods from the definition of input. Then input services means any services used or intended to be used by a recipient in the course or furtherance of business. And section 2 subsection 62 deals with the definition of input tax. The definition says it includes the central tax, state tax, IGST, or union territory tax charged on any supply of goods or services or both, and include the IGST on import of goods, reverse charge tax credit, but does not include the tax which are paid under composition tax. So basically, specifically, they have added this IGST, which is paid at the time of import of goods under the customs, is also treated as input tax credit for the purpose of GST. And even the reverse charge tax credit, whichever we pay under 9.3 and 9.4, also forms part of the definition of input tax credit. The issue here is whether the transitional credit also forms part of the input tax credit. This is one of the analyzing which has been made. What is transitional credit? The credit which pertains to the erstwhile law. It can be VAT credit, or it can be service tax credit, or it can be excise credit. If you read section 140 and section 141 of the CGST Act, which deals with the transitional credit, which has been converted, erstwhile credit is converted into transitional credit and has been credited to electronic credit ledger. But is it taking the color of input tax? Because there is a separate section for 140 and 141. So the input tax credit definition doesn't include the transitional credit. So this is what one thing we can analyze from the definition of input tax credit. Now, the most important aspect of section 16 is many times we try to understand that is it, because if you see the whole GST Act, you will find certain sections with the registered persons and you'll find certain sections with the taxable person. What is the difference between this taxable person and registered person? The registered person is the one who is registered under the GST law. The taxable person is the one who is liable to be registered, right? Who is liable to be registered or registered under the GST law. So if he is liable to be registered, then he will not fall under section 16. So the basic criteria for section 16 is he should be a registered person. If he is just liable to be registered and not registered, he will not fit into the definition of eligibility of input tax credit. That is the first aspect we have to remember whenever we read section 16. Second is used or intended to be used. The most important aspect is whatever the input tax credit we are going to avail, it should be either used, or if you have an intention that you are going to use it at a later point of time, that will suffice for you to take the input tax credit. It is not that immediately you have to use it for your outward supply. There is no nexus which is required that input should match with your output, but the condition is that it should be used or intended to be used in the course of business or in the course of furtherance of business. Very important. If you compare with the erstwhile law, there is a wider broad aspect has been given under the GST law. So furtherance of business, if you are going to use it at a later point of time, it will definitely lead into the furtherance of business. For example, you are investing today in some research. You don't know whether it is going to lead into some outward taxable supply or not. Out of 10 testing, say 4 testing or 5 testings are successful. 5 testings are not successful, but it is used in the furtherance of your business. It is used in the course of your business. So I think that will help you out to understand that if any inward supplies are used in the course of your business or for furtherance of your business, then you can take a credit of that, right? So you have to read it very broadly whenever you are going to read in the course of business and in the furtherance of business. Lot of time eligibility will be decided based on the used on furtherance of business. It is tested with these formulas actually. Whenever you have to test the input tax credit eligibility, don't forget that these three criteria are fulfilled for availment of input tax credit, right? So this is the first aspect of section 16. The second is, these all are preconditions. Whatever I'm talking here are the preconditions before availing the input tax credit. The second aspect is the heart of the input tax credit, which is that section 16 subsection 2 of the GST Act. The first, and please remember, all these conditions are mandatory. There is no option. All these conditions has to be fulfilled to avail the credit. If one of the condition is also not fulfilled, the benefit of input tax credit cannot be availed. So the first very important is possession of tax invoice or debit note or any other tax paying document. That is the first requirement to avail the credit. Goods have been received, but you have not received tax invoice. You cannot enjoy the benefit of input tax credit, right? The second condition is, this is a recent amendment which has happened in 2022, where the details of the supplier should be uploaded in the portal and accordingly it should be communicated to the recipient, which is a recent amendment in 1621A. That is also required to be fulfilled. That's why I think this 2B is implemented accordingly. 2A and 2B. Then next is receipt of goods or services or both. The most important is you have to receive the goods or services. It can be actual receipt, it can be deemed receipt also. Please remember, it can be actual delivery, it can be constructive delivery also, right? So this is what the conditions required for as a input tax credit. Then the next condition is that details of input tax credit should not be restricted under 38. We'll read in the next slide. That is also one more amendment which has happened. So it should not be restricted under 38, which is effective from October 2022. Then tax charge on such supply has been paid to the government by the supplier. I think this is most hue and cry which is creating today in the industry to see that tax has been rendered paid by the supplier, then only the tax credit can be availed by the recipient. And the fourth important is return has been furnished under 39. So form 3 has been filed, availed in 3B and credited to electronic credit ledger. So the most important is all these conditions should be fulfilled to avail the input tax credit. If one of the condition fails, you are not eligible to take the input tax credit, right? The next is, if goods against one invoice are received in lots or installment, input tax credit can be taken on receipt of last installment. I think many times we receive the goods in semi-knockdown conditions and you receive those goods in multiple lots. So the credit can be availed only when you receive the last lot of that installment, not at the time of first installment. So I think you have to take care of this and accordingly credit can be taken on the receipt of last lot. I was just talking on the section 38(2), which has been amended based on notification 18/2022. See how strictly they have made that even if the non-compliance is made by the supplier, the recipient will have an impact of their input tax credit. If the supplier has got registered only for temporary period, even in that scenario also the recipient may lose the benefit of input tax credit. Or if he is defaulted in payment of taxes for continuous period, even in that scenario also the recipient can restrict their input tax credit. Where output tax payable in GSTR 1 is more than 3B, like if the supplier is non-complying by inflating his GSTR 1 and reducing 3B, even in that scenario the buyer will get affected by restricting their credit. Availing ITC in excess of limit prescribed, like his 2B, he's availing the credit more than his 2B, or where output tax is not discharged by the supplier in prescribed manner. In short, what I want to say that if there is a non-compliance by the supplier, the recipient will get impacted to avail the input tax credit. This is a new amendment and system is inbuilt for section 38 to understand, because we may not know what non-compliance is made by the supplier. So system will get inbuilt in such a manner that it will throw upon you to say that it is an ineligible credit in GSTR 2B. Now let us come to the case. The first case is whether ITC can be availed on 2B. I think from 1/7/2017 to October 2019 or 19, there was no 2A. Right? So what was happening for that period, there was a availment of input tax credit. And I think most of you would have read the Bharti Airtel case also of Supreme Court, where they have discussed on this aspect. So many times the ground was taken before the authority that what is the legal backing that we have to rely on GSTR 2A? Because it is not a legal document. There is no condition which is specified in section 16 to treat this as a legal evidence or legal document. That's why they made all this amendment in 2022, and they brought an amendment in Rule 60, Sub-Rule 7, saying that an auto-generated statement containing the details of input tax credit shall be made available to the registered person in Form GSTR 2B for every month electronically through the common portal. So there is a legal backing now, because for 2A, we were trying to contend to the authority that it is only a facilitation tool. It is not a legal document. There is no section which is mandating to issue any GSTR 2A. So accordingly, that should not be considered as a evidence for disallowing the input tax credit. But now there is a legal backing for GSTR 2B. And accordingly, even they have made a changes in 16 to subsection A also, saying that the details of the invoice or debit note referred in clause A has been furnished by the supplier in the statement of outward. That is, in GSTR 1, the supplier should disclose his sales, which should be communicated to the recipient of such invoice or debit note. That is nothing but your GSTR 2B. So they have incorporated in section 16, they have incorporated in rule 2. So we have today the legal backing for GSTR 2B, right? Now, the most important is, I'm just trying to make you understand what things are impacting because of our GSTR 3B wrong filing also, or non-disclosures of data. So the first important point I just like to highlight to the members is, whenever this is the amended 3B, right? This is an amended GSTR 3B, which has to give the details of all eligible ITC, and whatever the ITC is populating in 2B is getting auto-populated in GSTR 3B. Table 4. Now, the most important is there is a specific column for import of goods, import of services, inward supplies liable to RCM, IST credit, no issues. Now, the problem is all other ITC. The issue is, for example, if you have any ineligible input tax credit, is it required to be disclosed in 4A5 and show it as a reversed, or is it not required to be disclosed? See, prior to this 2B, what we were doing most of the time, we were not disclosing our ineligible input tax credit. We were showing just net input tax credit to the extent of eligibility. But now, after this amendment from August 2022, it is mandated that you have to disclose even the ineligible credit, and it is advisable to disclose in 4A5, and then you have to reverse in 4B2. I think few of the returns where we are reviewing, we are able to see that there is a mistake of taking that reversal in 4B1. If you are doing a reversal in 4B1, even by arithmetical error or by mistake, it will be treated as a permanent reversal. You don't have any recourse to reclaim that. But if you are going to do the reversal in 4B2, if you have any doubt on any aspect, or if there is any interpretation issue, it is advisable to show it in 4B2 and not in 4B1. Because 4B1 will lead into a permanent reversal, and 4B2 is a temporary reversal. And if you want to reclaim at a later point of time, you can reclaim in 4D1, right? There is a 4D1 where they have stated that whichever ITC reclaimed, which can be reversed under table 4B2 in earlier tax period. So even for the ineligible input tax credit, it is advisable to show it in 4A5 and then show as a 4B2. You have to change your accounting details also, because many times we treat it as a cost of your expenses, and accordingly we don't disclose it separately. But it is suggested that if you bifurcate it as eligible credit and ineligible credit in your books of accounts, and accordingly it will be easy for you to reconcile with your 3B to decide how much is eligible and ineligible. Tomorrow, if the time limit has elapsed, you don't have any route to take any input tax credit. So if you have availed and then reverse, then there is no time limit to reclaim the input tax credit. So I think this is what you have to adopt the practice of availing the credit. Yes, sir. Yes, sir. No, sir, it is 5B1 and 5B2. No, it is 4B1, 4B2 only, sir. 5 is, I'm talking of 4A5. See, in table 4, you have gross, you have deduction, and then you have net. 5 I'm talking 4A5 is pertaining to all other credit. Right? You read this 4A, 4B, and 4C for the table 4. Right? I agree with you. Actually, we have given this suggestion to FKCCI also, because the difference between Rule 42 and Rule 43 is, in Rule 42, there is an option, there is a requirement of doing a provisional reversal per month. And by September of the following year, you can have to do a final reversal, which is not there in 43, but which is there in 42. So because of final reversal by the following September, if the amount is excess deducted or if it is less deducted, it will have an impact on your GSTR 3B. So we have suggested that Rule 42 should be brought in 4B2 and not 4B1. But for practice, as of now, what we are doing is we are adding up this provisional in 4B2 and we are not adding in 4B1. 43 we are taking there, but 42 for temporary purpose, as of now, we are taking in 4B2. So that if you would have excess deducted, you can reclaim in 4D1. Right? This suggestion has already been made 4 months back through association. We have tried to give a suggestion on this Rule 42 because of the mandate of that Rule 42, where you have to reverse your provisional basis and at the end of the year, you have to make it a final reversal. But we have to wait till that time. I think you can show it in 4B2, even though 4B1 is saying Rule 42 and Rule 43. Right? See, 4B2 is basically like payment within 180 days. If you're not able to make the payment within anything other than this, this 42, 43, 38, 75, whatever these others like payment within 180 days you have not made, or you have a doubt on that eligibility of credit, I think you can just show it in 4B2. Right? If you're confirmed, please show it in 4B1. If you have any reason of doubt, please show it in 4B2. Right? Though there is no specific instruction on that, but it is advisable so that you don't lose that, because 4B1 is a permanent reversal. So there is no reclaim option, whereas 4B2, you have a reclaim option of temporary reversal. Right? Shall I proceed? Now I'll just tell you, like, I just brought up some illustration for better understanding. For example, if the vendor did not file 3B, right, but he has filed GSTR 1, can the recipient avail the input tax credit? Are you able to understand? Whatever he's uploading in GSTR 1 will auto-populated in GSTR 2B. But when you see 3B filed, it will show as cross. So what you will do? You don't know whether he has disclosed these details in 2B or not. But if he has not filed GSTR, if he is filed GSTR 1, then it is fine. But if he has not filed GSTR 3B, can you take input tax credit? Where is the mandate that you cannot take? Because already it is auto-populating in your GSTR 2B. Correct. That's what I'm saying. Right. But the today technology is just giving you the status of filing and non-filing. It is not giving the details of quantum of taxes which has been paid by the supplier. Because when he is going to file 3B, it will be on gross basis. It will be on total basis. You don't know whether your transaction is reflected or not. So we'll come to that point also. Till that time, if he is just filed GSTR 1 and not, sorry, if he has filed GSTR 1, not filed 3B, I think if you can take it in 4A5 and reverse it, that is also advisable so that you don't lose the time limit, or you avail the credit on accordingly, right? Because it is reflected in your GSTR 1 and 2B also. Yes, that we have to take risk of that. Because temporarily, this is an arrangement which we have to comply with that. Because still that system is not able to catch up to the quantum of taxes paid by the supplier. It is able to give information whether he has filed GSTR 3B or not, but it is not able to quantify whether your transaction is offered to taxes or not, right? Yes, yes, that is also one of. So that's why it is advisable to take the credit accordingly. If he has filed GSTR 1 and 2B is there, yes. Your supplier. Supplier. 38 will take care of that. 38, section 38 is taking care of that. Automatically, it will restrict for you also. Then you can fight. Then again, I'll come to that burden of proof and all. I'll come to that. But yes. Yes. No, that's why there is a section 37A has introduced from 22. I'll come to that also, where they say that based on GSTR1, you can avail the credit, right? Till the next September, if he has not uploaded his 3B, and if you have claimed that credit till next November, you need not pay any interest. But beyond November, you will be liable to pay interest, right? So that is a welcome amendment actually. And I have added that also, which has been amended in 2022. So that will release you from taking the credit actually and not paying the interest, right? The second illustration is Table 4 of GSTR 3B requires reporting of ineligible ITC. Whether the same needs to be shown in row B or row D of Table 4. That's, I think I was just talking to you on this issue about ineligible credit. So I always say that please show that in 4A5 and accordingly show it as a reversal in 4B2 and claim the credit of eligible and ineligible. Even there are some suppliers who are having a rate of tax without ITC, like few works contractor, few construction, few restaurant, they will have ineligible input tax credit. Should those entities should also show their ineligible credit? Yes. Please show it in 4A5, show it as 4B2. Right? So this is the disclosure requirement. Tomorrow it should not happen that your return is incomplete. So it is mandated that you have to show this reversals in your GSTR 3B. Third, higher ITC than the eligible amount has been claimed wrongly in the previous month, and the same is now to be reversed. Therefore, the resultant figure is coming as negative. I think you all have experienced this. Because of that, it leads into a payment, and accordingly, automatically system is taking care of that, and accordingly, you are paying through ledger. Now, whether ITC can be used for payment of taxes while filing this DRC 3. This was a confusion, and now they have brought into saying that even you can utilize your credit ledger also for the payment through DRC 3. It need not be only through your cash ledger. It can happen even through your electronic credit ledger also. Now the next case study is on CSR spending by companies, that is corporate social responsibility. This issue was there under the Erstwhile also. This is there even under the GST law also. Under the Erstwhile law, there are certain decisions, though we don't have that authority on that law, but just for the reference, I would like to bring that the Senvar credit was eligible on the contention that it is used in the course of business. It is in relation to a business. But if you see certain advance ruling, though it is not binding on the taxpayers, but just to understand the reading of the department, they are saying that it is not eligible as under 17.5 because there is a block credit where you are giving goods on sample basis. So they're treating it as a free sample, and accordingly input tax credit should be restricted. But there are certain advance ruling where they have contended that it is used in the course of business. So accordingly, input tax credit should be eligible. So this controversy was going on for the CSR expenditure. So whether input tax credit is eligible or not, when the goods are given in CSR or services are given through CSR. So now the Finance Bill 2023 have introduced through in section 17 subsection 5 clause 5A, which states that goods or services are both received by a taxable person which are used or intended to be used for activities relating to the obligation under CSR referred in section 135 of the Companies Act 2013. This is yet to be notified. So they have brought under the block credit entry. So because of this, input tax credit pertaining to CSR expenditure will get restricted, but it is not yet notified. And if this get notified, it will be a prospective entry. If it is a prospective entry, we can take a thought that From 1/7/2017 till the date it is notified, you are eligible to take input tax credit, as there was no specific restriction unless they brought this amendment as retrospective, right? So we have to wait and see. Looks like it will be definitely a prospective and not retrospective. Let us wait and see, but this is for the restriction which has been specified especially for corporate social responsibility expenses. And the most important is it is referred to a corporates because it is referring to the referred in 135 of the Companies Act. So it is basically giving a restriction to corporates because they are mandated to expend this for CSR purpose, and accordingly the input tax credit is restricted. I believe that such expenses should not be restricted, right? Because it is for the furtherance of business and it is in the course of business. It is mandated by the law. It is a statutory requirement of the company's law. So accordingly, it should not be restricted. But anyway, they have brought it under 17(5), and 17(5) begins with the section saying that notwithstanding anything contained in section 16, subsection 1, because section 16, subsection 1 says it should be used in the course or furtherance of business. Notwithstanding that, even though it is used in the course of business, it is restricted under section 17, subsection 5 of the GST Act. Next, can ITC be availed by one distinct person and utilized by another distinct person? I think you all know that today the registrations are taken based on state registrations are happening. Based on single PAN basis, multiple registrations are given in multiple states. So each state registration is recognized as a distinct person for the purpose of GST law. Now, for example, a simple example I have taken. For example, hotel is located in Maharashtra, where they have charged local tax. Definitely they have to charge intra-state supply because the location of the supplier and the place of supply is in Maharashtra. So accordingly, they have charged interest taxes. Branch K is Karnataka branch and branch M is Maharashtra branch. Actually, these services are availed by branch K. So whether branch K can tell, okay, raise the invoice in the name of branch M because it is also one of the distinct entity of branch K, or is it ineligible for branch K? If you read section 16, subsection 1 deeply, it says which are used or intended to be used in the course or furtherance of his business. They have not used of business. They have said furtherance of his business. So what do you mean by his business? Can we read that as his business on PAN basis or on the state wise? So looking into treating each distinct entity as a separate person, it is saying that it cannot be justified that it is used in the course of business. So it should be ineligible, or later on he can do that cross charge or ISD. That is a different aspect. But as a plain reading, it cannot be eligible for branch K being a CGST and MGST belonging to a other state, right? Any thought process on this? This is for service. For goods, anyway, you can do bill to ship to. That mechanism is there and deemed. Anyway, for services also it is there. But the problem with this hotel services is the place of supply and the location of supplier is in the same state. They cannot charge IGST. If you read 12(1)(a), basically it says the location of the supplier and the place of supply is a testing for it. So the place of supply is the location of immobile property. So that hotel is also located in Maharashtra. The supplier is also located in Maharashtra. So they cannot charge IGST to branch K. They have to charge intrastate taxes. This is not only for us. Even if we are going to other state and if we are availing the hotel facilities, even though if we are giving our GST, we are not able to enjoy this credit. Actually, we have the suggestions are went that this credit should be given, or there should be some amendment in 12(1) so that the respective recipient can enjoy the credit. Many times we lose the credit because of all this restriction. But anyway, that is the law of land today. That is the problem is, if tomorrow it is going to test as his business, then you may not be able to correlate with the used in the course of business. Because see, yeah, that's what, once you take it, if you are going to take your, first of all, you should be eligible to take a credit. Then the concept of his business will not fails. that is a mechanism that all commonly they are trying to cross charge. They are doing all that ISD distribution, but strictly reading of this in toto, it will not look, it will not fall within 16.1. That is.
Branches in Maharashtra, Delhi, Bangalore, and different states. Now we said that my head office is in Delhi. So whatever you bill it to Delhi.
Recipient based, no?
That is
Or event where it is. See, you have to read this 12. It is for different kind of services, different place of supply is tested. So for immobile property, they have defined place of supply as location of immobile property. If it is a event based, then the place where the event is held. If it is a transportation, then where the goods are destinated. So there are different activities where they have defined place of supply for different purposes. So in case if it is not falling in any of the entries, then it will go based on the recipient based. That is the residual entry. So looking into that, we have to understand which service it is, under which clause it is falling. Accordingly, you have to decide the place of supply, and then you have to see whether you are eligible for credit or not. Right? I was just trying to stress upon his business. That's why we are taking, but you can look into other way also. Now, the next most important is, can ITC be claimed when registration was cancelled or suspended? This is the most common things which are happening around, where section 29, subsection 2 of the GST Act deals with the 5 scenarios where the proper officer has been given the power to cancel the registration. One is non-compliances of the GST law. The second is not filing the returns as a regular dealer. The third is not filing the dealer as a composition dealer. The fourth is if you have not commenced the business within the specified time for a voluntary registration. And the fifth is where the registration has been obtained by fraud, misrepresentation, or suppression, as the case may be. So in this scenario, the proper officer has been given the power to cancel the registration after giving an opportunity of being heard to a taxable person. So in that scenario, if the registration is cancelled, how the input tax credit will impact? Right? Are you able to understand? I have not filed my returns. Because of that, they have cancelled my registration. I would have received certain services. I would have charged to my customers, right? But once my registration is cancelled, I am no more registered person. So once I am no more registered person, I cannot avail the credit, right? And even I cannot charge the taxes to my customer because I am no more a registered person. So you can claim the input tax credit on the invoices which are billed only up to the date of cancellations. So you are supposed to reverse your credit in case if you are not going for revocation of registration, right? Because you are no more a registered person for the purpose of GST. Now let us come to the second scenario where it is a welcome amendment actually, where your registration is suspended. See, for example, if the taxable person has applied to the government saying that I want to cancel my registration. So what government will do? It will just suspend it because immediately they cannot cancel. They will suspend your registration so that you don't do further activities, and they will just verify your accounts and all other compliances. Now let us presume, and there is a rule 21A. I request members to please note down. This is also one of the important rule which has been amended in 2022, where they have given certain scenarios where the proper officer can suspend your registration. What is that? If there is a invoice, if the business is not conducted from the declared place of business, if there is a non-compliance of anti-profitable provisions, if there is a fraud by not, that is what bill trading, what we call, or if the bank details are not furnished within 45 days from the registration, or if your GSTR 1 is more than your GSTR 3B. So there are so many scenarios which are specified in Rule 21A, which can lead into a suspension of registration, right? You have to understand the difference between cancellation, revocation, suspension. So what will happen in this case when the registration is suspended, let us presume, and then you have filed the returns, you have paid the taxes. So in that scenario, for example, it is suspended, say in Jan 2023. And it is revoked in June 2023. For this 5 months, I'm just giving you very short period. Generally, it may happen in 5 months or it can go beyond that month. But for this 5 months, the activities is suspended. The recipient is going to lose the credit. The supplier is also as a recipient, I may not be able to enjoy the credit. So what this law has stated, irrespective of the time limit which is specified in 16.4, once your registration is restored, when you give all these compliances under the GST law, when you are able to prove to the department or the authority that yes, you have complied with the GST law, then accordingly your registration will be revoked, right? It will get restored. So once your registration is restored, the input tax credit for that transition period, for that span of time can also be availed, irrespective of the time limit which is specified under 16.4. Because it is because of the default of the authority, they have cancelled my registration. I am able to justify with my evidence that it is not required to get suspended. So accordingly, they have looked into these transactions and accordingly the registration is restored. So you can enjoy the input tax credit for that span of time also by issuing a revised tax invoice, and you can collect the taxes at later point of time from the recipient also. The problem is if it is B2C, it is anyway task to collect the taxes. Generally, they do it as inclusive. But if it is a B2B, you can raise that invoice, debit note or was as a supplementary invoice, and you can collect the taxes. So this is one new amendment which has happened for that period, because we have seen you and crying last 4 or 5 years where the registration cancelled. They did not file the appeal. They did not revoke within 90 days. And I think most of you are aware that we have an amnesty scheme now, which is there up to 30th June. If any of you have missed that amnesty scheme, please avail the benefit of amnesty scheme by getting your registration revoked or by filing all that returns which has with nominal late fee and get complied under the GST law. So what I meant to say is that transitional period, we were losing the credit. Now, because of this rule, we are able to enjoy the credit. So you have to read Rule 21, Rule 21A and Rule 22 of your CGST rules to understand how you can avail the input tax credit also, along with the registration process. Right? Any doubt on this? Shall I proceed? Now the next issue is time limit for input tax credit. I think few of you may be aware of this amendment. Till 1st Jan 2021, 16.4, which pertains to the time limit to avail the credit, the debit note was connected with the date of your original invoice. So accordingly, the recipient were not able to enjoy the credit because the time limit for original invoice was expired. So accordingly, the input tax credit pertaining to the debit note raised by the supplier was also getting restricted in section 16 subsection 4 because of the drafting of section 16.4. So they amended from 1/1/2021. So now the date for availing ITC on debit note will be from the date of debit note and not from the date when the original invoice is raised against that debit note, right? So I think this is the most welcome amendment so that you don't get restricted by 16.4, and accordingly you can enjoy the credit whenever there is a additional liability which has to be collected by the supplier from the recipient based on debit note, and accordingly it can be enjoyed the credit. Just an example of this, invoice is raised in 5th July 2021. The last date for filing this is 30th November. I think most of you are aware, last year the amendment has taken place from September to November. So debit note is also pertaining to 5/4/2021. So the last return is up to 30th 22. But if it is raised in 5th May 2022, then you have the time limit up to 30th November 2023 and not 22. Earlier, what was happening? It was only up to 22. Now the 1 year is extended because of the date of debit note and not the date of invoices. Are you able to get the point? Right? So this is what the amendment which has taken place pertaining to the input tax rate. See, if you read this supplementary invoice, they are saying that if there is an increase in the value or increase in the tax rate, so because of that, if you are want to raise the debit note, you have to raise, but your actual value was determined, and based on that, if you have inflated your value at the later point of time, then you will not have any interest, right? But if your original price was including say 100, but you have raised only for 80, then on 20 you will be impacting the interest actually, right? Now, this is also one of the common issues which we look into that. Can ITC be availed if supplier has charged higher rate of tax than actual rate of tax? Say, for example, he charged 18%, whereas he was supposed to charge only 12%. Whether there is any impact to the recipient to avail the credit. This issue we had under the Erstwhile law also. This issue is there even under the GST law also. So can you restrict the recipient to avail the credit because the rate of tax was 12%? Because the GST works on the system of self-assessment, and it is self-assessed by the recipient on the basis of the conditions specified under section 16. So he is not going to assess the tax rate charged by the supplier. That is not his self-assessment, right? So 59, if you read, he has to assess his tax. He should not assess the tax of his supplier. So accordingly, the recipient should be eligible to claim the credit. If they want to do the recovery, they have to do from the supplier and not from the recipient for wrong charging the taxes. But in that scenario, the supplier should raise the credit note if there is a change in the taxable value or tax rates as the case may be, right? Within the time limit specified. But you cannot charge the recipient saying that your vendor has charged higher rate of tax. So you have to reverse your input tax credit, right? So assessment, if you read section 59, self-assessment, which deals only with his assessment and not with the assessment of his supplier. Any other aspect here? Anything for this? I think in that scenario, he can ask the vendor to, generally it happens that he raise the credit note and reduce the tax value, whatever it is, less or more. There should not be any liability. Based on section 59, there's no liability. He should not suffer. He need not assess the tax rate of his vendor. But generally what happens, they will adjust the value of tax rate by issuing the credit note, either inflating debit note, reducing credit note. Yes, correct. He need not assess that, whether the tax rates are correct, because no, there should not be any allegation on the part of the recipient. Even if they are contending, you can go with the principles of section 59 and section 16 itself, right? The next is we are able to see in day-to-day that many times invoices are raised in the name of employees, and employees are getting reimbursed from the company, and few of the entities are enjoying that credit. Is it eligible? Because today the way the system is working, unless you don't give the GSTIN of that recipient, you will not get a credit reflected in your GST2B itself. So many times if you are following the traditional practice, that has to be changed, and it should be seen that employees should give the GSTIN of the company. They have to give the details of the company if the company wants to avail the input tax credit, unless it is restricted, right? So earlier in service tax and VAT, that practice was there, but that practice will not comply under this GST law. So I think it should be raised, the invoices should be raised in the name of the persons who are availing the input tax credit, whatever it is, either whether it is for the goods or services or whatever it is, even if it is in the ineligible, eligible, everything should be happening in the name of company and not in the name of employees, right? Earlier in the Erstwhile law, if we were able to see that even if the mobile or any other expenses were in the name of company, they were saying employees are also part of the company itself. So accordingly, the input tax credit benefit was given to the company. But the way the conditions are specified today, you are not able to enjoy that credit unless that credit is received by a registered person. Next, ITC is allowed on travel benefit to directors. If you see 17.5, it is restricting travel benefits to employees, right? So you have to classify your directors who are executive directors, non-executive directors, independent directors. If they are not employees, then I think you can enjoy the credit, because the restrictions speak on travel benefits to employees. The restriction is only for travel benefit to employees. So I think you can assess accordingly. Yes. Partner or? Yes. See, partnership and partners are one and the same. So this question never arises there, right? This question arises only in the case of corporate or company. Restricting action. I believe that this 17.5 majorly the restrictions are for employees. Rather, I know that's what, how you read this travel benefits actually. That's why 16.1 says, even though it is in the course of business. See, rent a cab, I'm saying. See, there is a specific restriction for that. The first entry of 17.5.1 speaks on motor vehicle, right? Where your motor vehicle is having a capacity of less than 13 passengers or 13 members, seaters, including driver, the input tax credit is restricted. It is blocked unless it is used for the further supply of such goods, or it is used for the transportation of passengers, or if it is used for the training purpose. So it means they want to give the benefit of, see, for example, as a chartered accountant, if I'm using my car for visiting to the client place, actually it should be eligible now because it is used in the course of my business. But if you read the restriction 17.5.1, it says that only in this scenario the input tax credit is eligible. So if it is above 13 seating capacity, it is eligible. But if it is below 13 seating capacity, it is not eligible. I know it is really adding a lot of cost many a times, but the one thing what they are trying to bring out here is they are, at least they brought that 13 and above 13. So if you have many companies are owning the vehicles which are above 13 capacity, and at least they are able to enjoy that credit. Earlier, prior to this 1 to 2019, that's what, depending upon the sitting capacity, you have to decide. Yes. Yes. And one more thing they have used the word is transportation of passengers. So can you treat these employees as also the passengers? So again, we have to read the allied laws, Motor Vehicle Act, all that passengers. Can we add these employees also as passengers? So all these issues are there with that actually. So that interpretation is there. See, for aircraft and vessel also, they brought one more entry, 17.5 AA. So where even in that case also what they have said, if it is in relation to your composite supply of services or in relation to your supply of services, and if it is inbuilt in your composite supply of services, then you can prove that it is eligible for your credit. So that is one exception they have brought. That is a one thing. And second thing what they have brought is if it is obligatory for the company under any law to provide that, then you can enjoy the credit. So it goes with the facts of the case, where it is used for what purpose. You feel, I will just tell you one more example in that. Beauty treatment is there. Today, beauty treatment, they are saying if it is used in the supply, in the course of your composite supply or in the course of your further supply, you are eligible. Now I'll tell you, this airline industries are investing so much on this beauty treatment. Can I say that it is used in the course of my supply? Difficult, right? Because though it is used in the course of business, but it should be in relation to that outward supply. I can't say that this beauty treatment is in relation to my outward supply of airline service. So all these trickling issues are there, and a lot of litigations are there, a lot of decisions will come on these issues. But this is what today the reading of the law says, that unless you are not able to justify that it is used for your composite supply of services or mixed supply of services. For example, I have given a case study here also. For example, if he is an event manager, I avail all the services, whether it is a catering services, health, whatever this rent services, cab services, all these are my inward supply, but it is used in the course of my outward supply. So I can prove that yes, even though it is restricted in 17.5, these cab services are also restricted, catering services are also restricted. But if I can prove that these are my inward supplies, which are used in the course of my outward supply, then you can enjoy the credit of that. So they have brought an exception. So we have to link our inward supply with our outward supply, sir. Actually, if you, yes, I agree with that. I'm giving a very simple day-to-day what we are facing today. As a CA, without this transport facility, we cannot render the service, we cannot travel this. But still they have not given the benefit. And I feel that why this restriction they have made for employees, whether it is a health insurance, cab, why all this health benefit, they would have made it more wider. They would have reduced all these cascading taxes. Why this block credit is made for all the small amounts actually? How much it will impact? You would have given overall, okay, you enjoy the credit as long as you are fulfilling the condition. You need not bring so many restrictions. Even the CSR also, I was not, I rather when we have to give a statement of objections, we have sent to that. We state it is a statutory obligation, yes. Fine, no, you have incurred that cost. You have incurred that cost for complying a statutory obligation. Then why the benefit should not be given? And there is a provision also in 17.5 where it is obligated by the law for this all above services, you are eligible for credit. Then why not for CSR? Because that is also a statutory obligation which is required under 135 of your CGST Act. So you have to mandate it comply. Once your requirement for statutory obligation, I think it should not restrict your credit. That is what the suggestion we have given. We have to wait how it is going to get notified. Even we have asked the suggestion if it is more, the mandate is requiring 2%, I would have incurred 5% or I would have incurred 1%, whatever it is. So they should bring more clarity on that restriction. He's claiming the credit. It's restricted. Everything will come then. Difficult. It's a little, I cannot say it. If you are very conservative or aggressive, depending upon your contentions, you can decide. But reading of the law today says it is blocked. Yes, I'll come to that also. There is a, yeah, I'll come to that. Yeah, that also one interpretation is going on because of this reverse charge where they are saying, but if you see in notification 12/17, entry 12 and entry 14, entry 12 is using the word in the course or furtherance of business. They made an amendment actually, and they brought a clarification also. So reading that, I feel you may need not restrict under 17.5, you can enjoy that credit. Yeah, sir. I know, sir. It is correct. Yeah. See, there are certain policy matters. There are certain. Correct. See, there are, I think what we have to look this is, there are certain policy matters which we cannot question, which we are binded to comply under that.
Rather than individually going go for the business purpose, and if more people are there, they will be for a benefit purpose.
Correct.
It is reverse.
Correct. It should, from long-term perspective, if you ask me, they should remove all this block credit. They should remove all these exemptions, because exemption also stop your credit. Yes or no? Somewhere it becomes, see, for example, for hospitals, you are saying that if you are providing healthcare services, you are not liable to collect the taxes. But there will be so many inward supplies where I would have paid the taxes. And ultimately, input tax credit is not eligible when it is used for your exempt supply. So ultimately, indirectly, it is becoming a cost to that entity, right? So rather, I think to avoid this cascading effect, they should remove this. They should reduce the, comparatively, they are reducing the exemptions, no doubt on that. But they have to make it very narrow so that you can enjoy that credit and the credit flows finally to the consumer actually, right? Anyway, we'll see how it get in the course of time. Next is, I think this is also one of the most common issue I thought I will bring to this. Can ITC be availed if supplier is allowing the discount while making payment? I'll just tell you the simple example of this. Don't read this. This will again create a confusion. First, let us understand the reading of section 15, which talks on a discount which can be given by the supplier to the recipient on the condition that it can be given at the time of issue of invoice, or it can be given at a post supply subject to the condition that it is agreed at the time of supply and the recipient is liable to reverse the input tax credit, right? So the discount can happen at the time of issue of invoice, or it can be a post supply discount also subject to the condition which is specified under 15 of your CGST Act. Now the problem has arisen. There is a concept of credit note which is given in section 34, which gives the time limit to issue the credit note if there is any reduction in the taxable value. So the amount which is pertaining to your post supply discounts, which will be given through the way of credit note, then the tax to that extent of discount should also get reduced when the credit note is raised to the recipient. In case if the credit note is issued within the time specified, it is a GST credit note. Please understand. There's a difference between GST credit note and financial credit note. If the GST credit note is issued to the recipient is supposed to reverse the input tax credit to the extent of tax paid on the discount. But beyond the time limit, if the supplier is issuing the financial credit note without giving any impact to the taxes, without reducing the value of taxes from the value, then even the recipient is required or not required? Not required, right? Because already the tax has been paid by the supplier. But the problem is, tomorrow the contention is, if you read proviso to 16.2, it says that you have to make payment to your supplier. So to the extent of discount, you wouldn't have paid to the supplier. Then definitely the input tax credit pertaining to that supplier, if not here, it might get restricted there also. Though section 15 is not restricting directly, but it can have impact on for 16 to proviso basis. But there is one MRF, you have to refer this circular 92 also and refer this decision. This is just a AAR giving. They have stated that ITC can be availed only to the extent of payments made by the recipient to the supplier. So if he has any post-supply discounts are given, then it cannot be availed irrespective of the fact that the supplier has discharged tax on the full value. So this decision, this is not binding, I'm saying, but this is just giving a reading of the department or understanding of the departments, right? Yes. Yes. Time limit, you can take the deduction. No, when it is mandated by the law, section 34, you cannot substitute with financial credit note. No, that should not happen. Then again, you are not complying with 34. Right? That is what I am trying to say. ITC will divide if supplier is issuing time barred credit note, right? Different schools of thoughts are there, which we have discussed now. Now, the one more issue is whether ITC be reversed while claiming insurance in case of goods lost. This is also one of the issue which we are able to say, because if you read section 17 subsection 5, they say goods lost, destroyed, stolen, blah, blah. Now, destroyed. So once it is destroyed, your input tax credit is restricted. But when you have procured those goods, you were eligible, right? But because of any natural calamity, it got destroyed and you have claimed the amount from your insurance company. So if you are receiving the amount from insurance company, including the tax component, then you have to reverse your input tax credit. And to the extent of reversal of your credit, you have to take a chartered accountant certificate to prove, and it has to be given to the respective authority to say that to that extent credit is reversed. Otherwise, it will be double benefit. On one hand, you are enjoying the credit. On second hand, you also receive the claim of those taxes, right? So that is what the understanding of this 17.5H. Now, next is, can ITC be availed if the supplier was GTA and tax paid at 5% on RCM basis? This is also one of the most confusing, which is happening. So basically, this restriction is there for the supplier. Please understand, wherever the GTA is charging 5% under, as you all know, today GTA has options. He can charge 12% under forward charge with credit. He can charge 5% without credit under forward charge, or he can charge 5% under reverse charge based on the amendment which has taken place in July 2022. Now the issue is whether even the conditions apply to the recipient also. So this condition is not applicable to recipient. This condition is applicable only to the supplier. So once the recipient is paying this taxes under reverse charge, he is eligible for input tax credit, right? Next, can ITC be availed? I think this is one of the observations which is going on in most of the GST audits today, or GST investigation, wherever this issue is happening, where on certain missed transactions, you would have missed the transaction of paying, say, reverse charge. For example, say legal fees. If you have not paid the taxes on those reverse charge, can you pay today and take the credit? Because 16(4) restrict you to take the time credit for that pertaining year. Say, for example, the credit pertains to, say, 1920 or 2021. What is the time limit to take the credit? It is only up to September 2021. Whereas today, if you are paying the taxes, can you avail the credit? We have given a suggestion this time to come out with a clarification to avoid the intricacies with the authority. Though if we read the sections today, in strictly, if you read 13(3)(f), which gives a power to the recipient to raise a self-invoice, right? In case if the goods are procured from or services are procured from unregistered person. And rule 36B, if you say, which pertains to the documents to avail the input tax credit, it says that an invoice in accordance with the provision of F subject to the payment of tax. So this invoice, they are talking only for reverse charge tax. And here the word they have used the word as subject to payment of tax. Is this payment of tax is by the recipient to the government? Yes or no? So based on this, I think we are trying to bring a submission saying that as the payment of taxes has happened in 2023, the credit should also flow in 2023 and not in 2020 and 21. This is one of the school of thought I'm saying. But the authority is not accepting this contention, and they are saying that the 16(4) time limit has been elapsed. Though you are paying today in 2023 along with interest or penalty, as the case may be, you are not liable to enjoy the input tax credit. So I think these matters are taken up to the higher authority, and we have to wait, and we have given a suggestion also to the respective authority. Please come out with a clarity whether we are eligible, not eligible. If we are eligible or not, we want a clarity on this, because if we are paying today, whether we have to refer rule 36 or whether we are referring 16 subsection 4 of your CGST Act. This is the one of the most common issues. So I think it find a relevant. See, 73 and 74 is the adjudication proceedings, which has to be done by after completing 61 or 65, or as the case may be. See, this 73 is covered only in 5 scenarios, where you are short paid the taxes, or where you have wrongly availed the input tax credit, where you have wrongly utilized the credit, where you have availed the erroneous refund. All these scenarios are specified in 73 and 74. So in that scenario, if they find that this is a short payment of taxes, and if you are able to contend in your show cause notice saying that based on this rule and section, you are not eligible, you are eligible to take the credit. If you put this contention in your reply to your show cause notice, it will be easy for you when this matter is taken to a higher authority. If you have not contended, if you are silent, it becomes your deemed acceptance, right? So you have to contend on that, and it will be decided by a higher authority to give the credit or not. But that submission should be made in the reply to your show cause notice. Yes. Which one? See, basically now, if you are able to, I think you are aware that still tribunal is not constituted. So definitely after this adjudicating order under 73 or 74, the matters are taken to commissioner appeal. So either if the commissioner appeal is decided, it is still awaited to form a tribunal. So we are awaiting for the GST tribunal. only in few circumstances, they are filing a petition to a high court or they are taking the matter to high court when the stakes are high. But comparatively, this matter is still with the first authority itself, right?
Time limit for issuance. I know they become, I think, 45 days is the maximum time.
Reverse charge tax.
Reverse time.
Correct. That is what that. Correct. See, if you read 31(5)(e) and F, one is talking on raising the invoice. One more, if you read, it is talking on payment voucher. So whenever you are making a payment to your vendor, you are issuing a payment voucher. That will suffice to evidence this transaction that reverse charge has happened in that period, right? That is why we are trying to read this subject to payment of tax is to the, because we are not going to pay the taxes to your vendor because he's an unregistered. So we are going to pay these taxes to the government. So there is a document called as payment voucher, which is there in 31(3) and F if you read, and this is applicable only when your procurements are from unregistered vendors, right? So if it is a registered, then no question, you have to pay the taxes. This invoice will not hold any good because the invoice would have been raised by your vendor and accordingly you are liable to pay the taxes, right? So self invoice is only issued when your vendor is unregistered. Remember, okay? Next, if they would have used only payment, then we would have thought of, because they have used the word here, payment of taxes. So that's why we are trying to contend on this submission. See, if you read that 180 days, it is excluding reverse charge. Yes, I understand. Yes, I agree with you. Yes, yeah, that's why you should not miss the availment. That's what I was saying. When I was saying you don't miss the availment. Reversing, that is a different, re-availment is, but don't miss the time limit of availment actually, right? Then this is also one of the things which is commonly happening, book adjustments with your vendors. You are playing the role of debtors and creditors. So because of that, there will be certain payment settlements between your vendors. So can you take the benefit of payment within 180 days to the extent of adjustments? Yes or no? Yes, because it is also a consideration which is flowing in the form of book adjustments where there is certain due from the vendor to the buyer and certain dues are from buyer to the vendor, and there are certain rulings also, so which is very clear. So accordingly, the input tax credit should not be denied. The next is this reversal of ITC. I think this requires more deep study on this. I'm just giving it as a reference of circular 92/19. There are a lot of views on this aspect. On one aspect, they are saying if it is buy one, get one offer, if you're coming out with this offer, and if your composite supply price includes more than one supply, then you are eligible to take input tax credit because the price is a single price which is charged to the buyer, which includes the price of your free goods also, right? Which includes the price of your offer goods also. So accordingly, input tax credit is available in case of buy one, get one offer. But in case of free sample and gift, what they have stated, whenever any supply is made without a consideration, because section 7 subsection 1, one of the criteria is there should be a consideration. If the supply is made without a consideration, it is not at all a supply. So if it is not a supply, there is no question of levy of taxes. And they are also restricting the input tax credit on this samples or gift under 17(5) subsection H. But if you see schedule 1 of your GST Act, where there is a supply made between the related parties or between the distinct entities, even without a consideration, it deems to be a supply. So in that scenario, if it is transaction is happening between the related parties or distinct entities, then your input tax credit is available because you are going to charge the tax on the transaction, and for employees anyway above 50,000, all that they have given. And if it is an unrelated person, we can say that it is not a supply and ITC is reversal. And this is still subject to further things. This is only, I am reading whatever is given in circular 92/2019. Yes.
Marketing firm is distributed as free samples to people at various locations such as a mall. And then we get a database like Google, Facebook, their contact, whatever, and it is paid forward with and then they charge the company, they charge the firm 12 amount. And they said that with this, you get this as a provision, this is your consideration, but you don't pay me the.
Go with adjustments. It is going with your book adjustments then. So you can take that concept of consideration there. Yes, yes, yes. Then this is also one of the issue on retention money. I think you all know many times we enter into a contract, there will be a cost on this performance guarantee and retention money. This was there in service tax law also, and it is such contracts are entered in the GST law also. But there is a provision which states that you have to make payment to your vendor within 180 days from the date of invoice. Now the issue is if a percentage of amount is kept as a retention money, whether input tax credit proportionate to that retention money should be restricted, or it can be availed in toto, giving the contractual terms based on retention money. So in service tax law, in case of Hindustan Zinc Limited, where they have stated that, yes, retention money is a part of their contractual clause, as the payment of service tax is already made to the vendor, the benefit of input tax credit should be given in toto to the recipient. Whereas in GST, if you read strictly reading 16 to proviso, it really proviso says you are eligible to the credit only to the extent of payment made to the vendor. So to the extent of retention money, I think you have to restrict the credit, because statutory obligations will definitely override your contractual obligation. Though you have a contract of performance guarantee, amount to be retained, all these contractual terms are there. But when there is a statute which is obligated for you to make a payment and take credit, then I think it will get restricted. So we have to wait furthermore decision on this aspect. But as on today, this is the understanding of 16 to proviso. Yes, sir. Yes, you can avail. That's why you please avail and see that you reverse it, so that again you can reclaim it at the later point of time. Few of the entities are taking the full credit also. Yes, correct. Correct. In the same month only you can do it. You have to plan it according. See, whenever you enter into this any contractual agreements for whatever purpose, whether it is for execution of contract, whether it is for the availing of the service, please keep the principles of input tax credit also. For example, this AMC contracts today we are entering. Please see that you enter it quarterly or period. Don't enter for 1 year or 2 years, because one of the condition is that you should receive the services. So you cannot keep on installing that services and take up that credit. So all these possible issues can come because you have still not received the services. Only the invoice is raised and you are taking the credit. Because one of the condition is that you have to receive that service. You will be receiving that services in installment, or even this insurance contract. Various such contracts are there. So I think you have to factor this implication of credit whenever you are entering into any contractual terms with your recipient or with your vendor, as the case may be. This is just, I'm trying to point out how the relevant aspects are important whenever you are going to look from the perspective of input tax credit also, right? Because input tax credit is your cost. And tomorrow, if you have taken wrong credit, it will result into a interest based on 75 subsection 9. Interest is automatic. Even if it is not quantified in the order, it will become automatic, and penalties are quantified under respective chapter for non-compliances. Unnecessary, you will end up paying this. So I think you have to be very specific, clear with your provisions of the law, right? You cannot say that in my contract it is written for 2 years, so I will pay after 2 years. No, because law says 180 days, you are binded by 180 days, right? Yes. From the date of invoice. That is what I'm saying. Within 180 days, you have to plan it. If you don't do, you will end up paying interest from the date of invoice. Right? No, it's not a transferring. You are availing and then reversing, because you are not going to make payment within 180 days. So at least you have availed. Once you have availed, you have fulfilled the condition of 16.4. All that based on facts. You have to decide how your contractual terms, what will be the quantum of retention, how are the payments made, all that will decide. You can look into that aspect actually. We have to see how the consideration is decided between the parties. Huh? Schedule 1 transaction anyway, it is without consideration, and this proviso to 16.2 is not at all applicable to Schedule 1 transaction. Rule 37 is very clear on this. No, it is not. That's what I'm saying. For reverse charge, 180 days is not applicable, including import of goods, because you are going to file bill of entry and not required, right? So shall I proceed for the cases now, because time is less. Definitely, if anything, you please reserve it. I will take it little fast, and definitely I'll take it at the end if required. Motor car used for demo purpose. Anyway, we have two contradicting rules. Recent rule says not eligible. Earlier ruling said it is eligible in the course of business. Anyway, as on today, it says it doesn't have a character of new car, and accordingly, it is like a second-hand goods and not admissible. So different school of thoughts are there on motor car used for demo purposes. The next is missed invoices with belated returns. I think this is also one of the common issue where your input tax credit is missed for the earlier years, and you have enjoyed at a later point of time beyond the point of 16.4, whether you can enjoy that credit or where you have not at all filed the returns for that year and you are going to file it at a later point of time. Can you avail the credit by paying the late fees? So there are different thoughts on this process. Actually, we have to, it's still pending before the courts today. So we have to see how they are going to read this. But strictly speaking, section 16.4 is a strict compliance of the time limit. So that is a statutory provision of the law. Whether you have missed a credit or whether you have filed beyond the specified period, input tax credit will get restricted. But we can try to give our additional submission to save the input tax credit by differentiating between the missing invoices and belated returns. Then ITC, this is also few of the entities are facing this under construction plant and machinery. Please understand that whenever you are going to read 17.5, it has excluded plant and machinery. And there is a specific definition of plant and machinery in the section. So don't apply the plant and machinery which you are reading for income tax purpose. You have to read the plant and machinery as defined in 17.5 for the purpose of blocking this credit. The next is movable and immovable. This is also leading lot of issues, whether your input tax credit is eligible as it is resulting into an immovable property. So whether your testing is there at the time of procurement or whether your testings are to be done at the time of usage, right? So I think the major test what we are trying to say is detachable, non-detachable, immovable property, movable property, and whether is it giving an additional benefit to the land or is it giving an additional benefit to that machinery. So depending upon that, you have to test all the criteria and decide the eligibility of credit. And if it is a works contract service, then definitely you are restricted, because definitely 17.5C says that if your inward supplies is works contract supply, you will not get the credit unless your outward supply is also a works contract service. So you have to structure it accordingly so that you can enjoy the credit with the purview of 17.5. And one more important is capitalization also. If you're going to capitalize those expenses, then definitely it get restricted. But if you're not going to capitalize those expenses, you can still enjoy the benefit of credit. And then many times we have this, whether repairs on building is eligible, whether the small electrical repairs. I think this happens in day to day. So if you're capitalizing these expenses, not eligible. But if you're taking it as your revenue expenditure, you can enjoy the credit. Then wrong payment of taxes. This also we have experienced this, where your vendor instead of paying IGST, they have paid CGST, SGST, or instead of paying SGST, they have paid IGST. What is the implication of credit? Till now, there is only a clarification for vendor, but there is no clarification for the recipient. So there is no restriction as such. He can enjoy the credit whichever is there, because 77 has made very clear, if they have made wrong payment, they can make a correct payment, and within 2 years, they can claim the refund of their wrong payment of taxes. Which one? 17.7, if you read the heading now, and if you read the content, it is contradicting actually. So that is what I say, it is only for outward supply. Tax charge, it is using the word. You can try, you can take. You have tried, good. Because when I read 77, the heading and content was contradicting actually. And even the circular also has not brought very much clarity on this reverse charge. So you can take up the color of taxes and taking the color of supplier and take the benefit of that. Then reversal, I think this is what I just want to bring out, which I discussed in the beginning, where your supplier has not filed the 3B, but he has filed GSTR 1 by the next September, then you have to reverse your input tax credit. If it is within November, without interest, after November, it will be with interest under 50 subsection 1. I think this is notification 26/2022, which you need not miss your credit. You have to avail the credit and reverse the credit. Then this is also one of the missing point, which we are able to see, that reversal of input tax credit pertaining to the exempt supply. So whether we have to read this exempt supply only to the extent of definition, what has been given in 247, or are there any special transactions which they brought only for the purpose of reversal of input tax credit? So they brought a special transaction as exempt supply only for the purpose of reversal. So please don't miss this transaction of tax paid under reverse charge, where as a supplier, your recipient has paid the taxes under reverse charge, then it will be treated as an exempt supply for the purpose of reversal. Transaction in securities, your financials will have a lot of transactions on securities. That also should be considered for an exempt supply. And it is something 1% on your sale value, that explanation is given. Then sale of land, sale of building. The sale of land and sale of building is a part of your third schedule, which is neither a supply of goods or neither a supply of services. Only for the purpose of reversal, they brought under the concept of exempt supply. Otherwise, other than that, all other third schedule items are not forming part of your exempt supply, because it is neither amounting to a supply of goods or services. Yes, they have not yet notified. We have to wait and see, because Finance Bill 2023 has brought that amendment. But we have to wait and see how they are going to bring out. And there are certain transactions where they don't want to reverse the credit, like interest or discount earned, interest income, sale of duty credit script. You need not consider it as an exempt supply whenever you are going to reverse your common credit. So that is very clear on that. So canteen expenditure, I think some of them were asking this question on this. This is also one of the most litigated issue which is happening from last 4 or 5 years, where they are just trying to see whether they are eligible. The first concept, what we are trying to understand is, it should be in the course of business. So that is not the business of that entity. This is only a requirement under any act or under any statute. Then if they are providing this canteen services to employees, then they are eligible to take the credit, right? That is one we are reading the 17.5. But the issue is, only if it is obligated under the law, it is eligible, or can we say that it is given to an employees in the course of business? So the issue is, this issue was, I think from 4 or 5 years, this issue is going on. And if you see the rate of tax, they have amended in somewhere 14/2018, they have initiated the rate of tax at 5% without credit. So once it is anyway 5% without credit, you need not worry that it is a block credit or eligible credit. Now one more amendment, what they have done is, if this canteen is forming part of your salary, if this canteen price is forming part of your salary, there is no requirement to collect the taxes. But if it is beyond your employment contract, if it is an additional facilities which is given to an employees in the form of perquisite, which is not mandated under any law, then in that case, they have the rulings are saying that you are liable to collect the taxes, and accordingly taxes has to be discharged on canteen. So there are a lot of contradicting advance rulings are there on this aspect of canteen. But anyway, now it is 5% without credit. So I don't think so you have to look much into this aspect, but you have to be very clear in your employment contract. So if it is beyond employment contract, there can be an implication of taxes on subsidized price. And because the employer and employee are always related parties, the values will be as per the GST rules, all that 2820. That is what you have to contend. That's what I'm saying now. Either you have to say it is not in the course of business. That itself, the definition of business itself fails. So if you fails on the definition of business, there is no further requirement to be looked. That is a one test you can say. Second test is, it is obligated. So it is given, it is forming part of your employment contract. And anyway, it is 5% without ITC. So all these factors should be tested whenever it is looked into that. Yes.
Then and they basically charge only canteen services. They purchase food by themselves. But
Yes.
we charge canteen services.
Yes.
Then
No, I'm saying that is what 5% without ITC only. So once you are going to charge, they are also going to charge 5% without ITC. Once again, I will also charge, it is 5% without ITC. So it will be always 10% cost for me. No. It is a supply of services as per Schedule 2, no? So it cannot be broken, and you have to be very careful when you're deciding this catering contract with the employees, right? Right. So these all are the obligation I've just added up for, because there is nothing like they have just said for the time being in force. I've tried to bring out certain which is in force from based on the erstwhile law decision. You can read it out. And I think this is for construction of warehouse or construction of rental properties. I think this decision we are awaiting Safari retreat. Some of the entities have just kept the credit. They have availed the credit, and under protest they have kept it. We are just waiting. We are only hearing that yes, it is awaited, it is stayed, but we have to wait and see how the decisions is going to come in case of Safari Retreat Private Limited, because section 17(5)(d) has been read down. It is not struck down, it is read down. So we have to see how it is going to be analyzed. We have read on this. Then utilization of credit balance. I think a few of the issues we get, whether this credit ledger balance can be used for all these liabilities proceedings. Whenever there is a department proceedings, can you utilize your credit ledger balance for that? Few of the entities are just making a payment from cash ledger without knowing that they can utilize even their credit ledger balance for making the payment during the proceedings. But it cannot be used for the payment of RCM liability or any erroneous refund which you have to refund back, or payment of interest penalty or late fee. So whether you can utilize for filing GSTR 9, yes, you can do it. Can credit be utilized for appeal proceedings? We have tried and we are able to file the appeal by utilizing your credit ledger balance. If any of you have got restricted, you can let me know. Otherwise, I think we are using the credit ledger balance for making the payment even during the proceedings, the 10% or 20% tax as the case may be. Then tax to be paid by the supplier. I think this circular, most of you are aware, which we are trying to take the benefit during our audit representation, especially pertaining to the year 17, 18, 18, 19. And now even for 1920, the Wipro decision has come where you can try to give the reference of this circular and take the benefit even for 1920. So whenever the assessments are taken place for this year, in all these scenarios where instead of B2B, he has declared as B2C, or where he has filed 3B, not filed GSTR 1, or where he has missed the invoices, all those scenarios are there, or he has quoted wrong GSTN of the recipient, all these scenarios, there is a procedure. I think you can read it on self-explanatory, and there is a procedure. If it is exceeding 5 lakhs, CA certificate is required. If it is below 5 lakhs, you have to take a certificate from a supplier and accordingly furnish it to the supplier, to the respective authority, and they will test all your documents accordingly and give the benefit of input tax credit for the respective year. Right. So this is the decision of Wipro Limited India versus Assistant Commissioner of Central Taxes, which is pertaining to the year 1920 also. So you can just try to refer this. So now sir, can I take for another 10 minutes? Now the next is, I think this is one of the important section of this GST law, because this section we had in erstwhile also, which I'll be discussing later, but this section is talking on burden of proof. So burden of proof will be on the person who want to claim the benefit, right? So if, for example, if the department says today that you are liable to tax, they have to prove that yes, on what basis it is liable to tax. So similarly for the recipient also, the burden of proof is on the recipient to claim the input tax credit. So if he has to say that it is eligible, the burden of proof lies on the person who want to claim the benefit of that input tax credit. Now let us try to understand how this burden of proof is tested in erstwhile law, that is in state VAT law, which has come very recently. I think most of you are aware of this. That is the decision of Ecom Gill Coffee Trading Limited, because we are able to see that even during the VAT assessments, lot of your input tax credit are getting restricted, or they are not allowing you on the basis that your supplier has not paid the taxes. They are able to trace your details. Either they are not giving the subcontractor deductions, or input tax credits are not given because your vendor have not filed the taxes. So what happened in few of the cases, the recipient has tried to give a burden of proof by giving all the basic documents, that is tax invoice, bank payment challenge, and whatever the book entries which are accounted in the books of accounts. So with this, the assessing officer said, no, these are not the genuine documents. These are not the genuine transactions. So somehow the matter went to High Court. High Court says, no, the assessee has proved the burden of proof. He has given the document, financial documents are given by the assessee. So accordingly, he has complied with section 70 of the CA Act, and accordingly, he is eligible for input tax credit. But this matter was again taken up by the department to the Supreme Court, and Supreme Court has very clearly stated. I've just given a very gist of that. You can read it in detail. It is very small case, but it's give a lot of principles for us to understand that though there was no specific conditions as we have in GST, we did not have so many conditions in input tax credit, but still the decision says that input tax credit will get disallowed because mere production of invoices or payment to the seller is not enough. You have to prove the transactions with the movement of the goods. You have to prove the actual transactions. You have to prove with all that additional documents, goods sent note, all goods receipt note. I mean to say that additional evidences are required to prove the genuinity of transactions. It's not enough if you give just the invoice and tax paying document and saying that it is already accounted in my books of accounts and my burden of proof is completed under 70. So similar principle will definitely apply in GST also. So that's why we try to bring out, and there was a contention here that the recovery should be made from the seller and not from the buyer, because buyer is not burdened because of non-compliances of the seller. Those specific conditions were not there in the state VAT law, but still the input tax got restricted on the contention of burden of proof. So now looking into this GST law with so many conditions, I think you have to be very careful with maintaining the evidence, creating the evidence, and complying with the law, because a lot of transactions are getting integrated with your e-way bill documents, with your e-invoices, and with your other compliances. And I think you all are aware there are a lot of prime softwares and other this advice software, all that BIFA software, all that softwares are used to track your transactions, to trace the transactions. So I think burden of proof is always lying on the recipient whenever he's going to enjoy the credit. So that's what I just try to prove, that it's not enough if you just receive an invoice. You have to see that all the conditions which are mandated by the law is required to be fulfilled to avail the input tax credit. It has to be taken as it is taken as a very serious offense. If you read section 130, if you read 132, all this belongs to a transactions where there is no complete proof of a taxation, no complete proof of credits. Right, where the invoice is made without movement of supply of goods, where the supply of goods is made without an invoice. All the transactions are covered in section 130 and 132, which might lead to this, I can say, prosecution also. It can be leading to a redemption fine. All that things are there. Again, it will lead into a civil criminal proceedings also. So I think this input tax credit is most tested. You have to be very careful. It is your own money, but still you have to decide whenever you are going to take don't take it very casually. It has to be seriously analyzed, tested, and then avail the input tax credit. And most important is in the GST law, there is always a difference in the concept: eligible, ineligible, available, unavailable, entitlement. I think you would have seen in different sections they have used the different terminology. So every section, every word carries its own weightage. So I think you have to fulfill all those requirements under the section 1679 as the case may be. So, and one more thing is, always you please test whenever you receive an invoice, these all conditions are fulfilled or not. If these conditions are missing, many times we see that they just write inclusive of taxes. They missed certain information. Because of this small procedural non-compliance, it can lead into a big reversal of your input tax credit, because it is mandated by the law that these are the details which are required in the invoice. It looks very basic, but it still carries a lot of other serious implications. And I think this we have already discussed. Whenever there is a change in the constitution, you have to plan accordingly even for the ITC, because there is a specific requirement to transfer the credit of ITC to with the reference of transfer of liability. So I think this all is a requirement whenever. So don't be hurry in cancelling your registration. See that you comply with the input tax credit transfer, and then you look into the implication of cancelling or transferring the business, because it has other implication under section 85 of your GST audit. Yes. Yes. See, basically, if you look this change now, sale or transfer of business, it should be transferred with your liabilities. If you're just transferring your assets, then definitely you carry that implication. But if you're selling it as, you have to prove that it is a lump sum contract, it is not an independent, then you can prove that, yes, you have transferred. So ultimately the liability, to the extent it will be taken by transfer also. So if you read the liability chapter in GST law, which is talking on section 85 of your GST Act, which talks especially in the case of transfer of business. So to what extent there is a liability of transferor, to what extent the liability of transferee has been defined in that section 85. So I think that will give a clarity on to what extent he is liable for credit also. Then amount payable in case of supply of machinery, this fixed asset, whenever we are taking, look into the life of that capital goods also. The life of capital goods, irrespective of the actual life of the capital goods, the life of capital goods for the purpose of GST is always 5 years. Right? So whenever, if you have taken that purchase that capital goods, enjoyed the credit, and if you're going to sell it after 3 years, you are eligible to take credit only to the extent of 60% and not 100%. Why? Because the life of capital goods is 5 years. So 20% each year. So you will enjoy the credit only for 60% or the value whichever is higher. So all this concept you have to keep in mind whenever, even though that asset is obsolete, even though you would have written down, all that is there, but you have to be careful because there is a specific section for that. And even when the inputs and capital goods are sent for job work, anyway, there is no taxes on the out when the goods are sent for job work and input. If it is not coming within 1 year or capital goods are not coming within 3 years, you are liable to pay the taxes on outward. But anyway, you are enjoying the credit in case the principal is sending the goods for job work. So all this I have just added up. I think this will give the interest. And ISD also, please remember, whenever you are registered as an ISD along with your regular registration, see that every month you carry a nil balance. You have to transfer your both eligible credit and ineligible credit to the recipient, right? You cannot just carry forward any credit, especially in the case of ISD. Otherwise, you lose the benefit of distribution of credit under section 20. So that is what the section stated. And I think more or less I have tried to cover all these issues which are there, which is going around. So I just thought I'll just make it up. One thing I want to make in case of expiry goods also, some pharma companies, if you're able to see that they are returning back those expiry goods. So you have to just check whether it is within the time limit of that section 34. If it is not within the time limit, all that financial credit note, he has to raise a fresh invoice and accordingly, he has to reverse the credit. So that circular is also there. I think some 72/2018. Am I right? So that circular is also there. That should also be read for. So I think more or less I have tried to cover this capital. So whenever you have to take a decision on capital goods, take the implication, what is the risk it is carrying, whether it is beneficial to take input tax credit on capital goods or whether it is beneficial to take a benefit of depreciation, right? Because there are some capital goods which has the risk of eligibility. You can decide accordingly, because once you lost the opportunity, it might be difficult for you to re-avail the same benefit. So that decision you have to be taken. Credits are availed in different GSTN, which we have already discussed, and always re-verify your ITC masters and conditions. Just though the technology today is giving you all the ready-made informations, but it ultimately goes with your self-assessment, self-decision, and your understanding of the eligibility and ineligibility and manner of determination to the extent of taxable supply and exempt supply. And I also advise, whenever any credit note is raised by your vendor, see that you give an impact to your 3B also. Right? Please give the impact of that also so that it really reconciles with your books of accounts, and don't wait for the end of the year to reconcile your books of accounts. See that every month you do a reconciliations, at least quarterly you have to do a reconciliations, pass the entries. Please see that you give it, because it will be very late if you are going to take it at the end of the year, and there will be certain opportunities or certain credit which you would have got missed up. So it is advisable, especially in the case of input tax credit, it is always better to take health checkup of that tax credit, what we generally say common terminology for, especially because this is your own credit which has to be looked into, and accordingly it will get impact, especially this 2B reconciliations, your books reconciliations and your 3B reconciliation is must. And even in this case of bill of entry, import of goods, we have seen that it takes some time lag to get reflected in your 2B. So you have to do a reconciliation on that. Generally, I think now it is quite faster compared to this. Now I think we are able to get in 4 to 5 days, but any time lag is happening, I think that reconciliation has to be made by that entity, right? So basically this credit is required every month, monthly workings, reconciliations, eligibility, all that should be tested for input tax credit. It is not enough what is there in 2B, you have just shown in your 3B and close the issues. No, every month you are doing the self-assessment and you have to disclose the correct credit in your books of accounts, right? And whenever there is a doubt, don't forget 4B2 and 4D1 so that you can enjoy the benefit of that, right? So I think these are the macro aspects, I was able to think on the input tax credit relating to that. I think there is still a lot of issues are there. It goes along with that. But with the time span, whatever I was able to think on the issues which are currently going around, I've tried to highlight on this presentation. Right. So with this, if there's any issue, I think it was quite interesting, actually. Many of you have given quite interactive. Yes, sir. Please, sir. See, it is like what I am taking is October. Yes, because within 30th it has to happen. So it will be definitely November 20. So within 30th October. 23, 24, it will be up to October 24. Yes. GST credit note cannot be issued. Yes. Any other? Yes. 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 Okay. Okay. Yeah, actually, I think show cause notice RFD 8 you would have received, right? RFD 8 before this order RFD 6, I think you would have received a show cause notice in RFD 8. So basically, if you read circular 125, which has given a particular clause saying that at the point of sanctioning of refund, if it finds that that credit is ineligible, the officer has been given the power to issue the show cause notice. So the adjudication can happen at that point of time also, right? So I think they are well within that power actually. Why they are rejecting the refund? What was the reason? Is it because of ineligible credit, or if it is ineligible credit, 125 has given a power to the officer. Based on that clause, they have given and they can do that rejection of ineligible credit at the time of assessment. Otherwise, refund officer cannot act as an adjudicating officer. But only for this purpose, they have brought a clause in circular 125, which is giving them power to issue RFD 8, and accordingly, based on your contention, they will pass RFD 6. Yes, yes, that's what I said. Now, utilization, whenever you are going to repay that refund, you have to pay in cash. You cannot pay through credit, especially in case of ineligible credit. Yes. Yes, that is what the requirement. And I think there is a specific rule also, 96 sub rule 1. There is a rule that it has to be paid in cash and not through credit. Can you just repeat? I just missed. Yes, section 13.
That case, both the supplier and the recipient, they both agree that one is pending, but let us pay the amount to the government. So the supplier is able to pay the GST.
Recipient is paying this GST or supplier? Supplier has paid the GST. But not issued the invoice. See, whenever invoice is not issued, it is treated like an advance. You have paid taxes on advances. So especially when you are paying tax on advances, you have to issue the receipt voucher. And the recipient cannot take credit on receipt voucher. He can take credit only once you receive a tax invoice. Bill of supply is for exempted transactions. It doesn't have any tax component.
Once the supplier, their registration happens from the and then they basically get a tax notice.
Reversal of credit, yes. But have you taken the credit after his cancellation or prior to? Prior to cancellation, you have a strong case. You can take the credit of that. Under 63 as a assessment of based on estimates or guesswork. Yeah, actually, if that assessment comes, they cannot go for 73, 74. So they will estimate it. Against that order, you can go for appeal actually. Yes. Because 63 begins with section, notwithstanding anything contained in 73, 74, wherever a person was liable to be registered and not registered, wherever a taxable person was liable to registered and not registered, or where his registration is cancelled based on section 29 subsection 2, he will be assessed based on his judgment, right? And pass a assessment order within 5 years from the due date of your annual return, as the case may be, after giving an opportunity of being heard. Now the issue here is, this is an independent section based on best judgment assessment. So here the officer has been given the power in case where he was supposed to get registered and not registered. So they can only catch hold of the supplier and not to the recipient. For this input tax credit reversal, they cannot go with 63. They have to go with either 61 or 65, as the case may be. You can question on this section itself.
But all the documents are there available in the certificate, including the delivery.
Fine, okay.
But the guys not capable by the certificate, by the tax authority.
So that's why this rule 21A has come, 21A, 22. This rule has come only because of these reasons. If you see in 63, the cancellation is only when it is for 29(2). So in that scenario, if it is retrospectively cancelled, based on this rule, you can take the credit once it is restored, right? For revocation, the time limit is 90 days. So if it is revoked within 90 days, then he can take the credit. Or if it is suspended and restored, still you can take the credit based on this section. You can try. LG Infra is also there. There are a lot of decisions, 75-12, they are proceeding for recovery, all that is happening. But you can still contend against it. See, it should be against a taxable person. Who is a taxable person who is liable to be registered, not registered. So you can use the evidence of recipient, but you cannot ask recipient to be assessed under 63. It should be on the supplier and not on the recipient, because 63 is talking on assessment of unregistered person. So here the registered person is well within the registered person. So you cannot contend on recipient. It should be on the supplier. Right? So with this, thank you one and all. Thank you for making this session quite interactive, informative. Thank you so much.
Before formal vote of thanks, I have a couple of announcements to be made. We have 2 days conference on recent updates on Companies Act, which is supposed to be held on 23rd and 24th June 2023 in the same auditorium. Kindly register for that. It is a 12 hours CP program. And then we have another 12-hour CP program, which is 19th Karnataka State Level 2 days Chartered Accountants Conference at Anantya Palace Grounds, jointly by Belagavi, Ballari, Hubballi, Kalaburgi, Mangaluru, Mysuru, and Udupi branches of SIRCF ICI. I request each one of you to register for this 2 programs. Yeah. How the Honorable Supreme Court's ruling on ITC is affecting under erstwhile laws and has been dwelt in detail, and what are all the restrictions on ITC under GST law also have been deliberated upon with caveats for all of us. I know the knowledge kitty of each one of us here has got enriched by attending this session. Now, how to guide the dealers, clients who tend to take ITC just because they have inward supply, which might put them into trouble in future if utmost care is not taken. Thank you, madam. Thank you for that wonderful session. Thank you for your time and effort in bringing out and discussing on those nitty-gritties. And then on behalf of members present here and managing committee members of Bangalore branch of SIRCF ICI, we thank you once again. A round of applause, please. As a token of gratitude and respect, on behalf of all present here and managing committee members of Bangalore branch, we would like to hand over a gift voucher to speaker. Can I request CA Chandraprakash Jain, managing committee member, to do the honors? Thank you, CP Jain. Thank you, ma'am. And esteemed members, without you guys, I mean, we wouldn't have done this program. Thank you so much for your presence here and then support for Bangalore branch. On a request to keep supporting us in all the programs of Bangalore branch in future also. With that note, I, CA Manjunath M. Hallu, Secretary of Bangalore branch, sign off for the day. Thank you so much.